Good morning and welcome to the second panel debate of the day. We will be discussing how to maximize opportunities in the buy-to-let market. So thank you very much for joining us. The world of buy-to-let has been changing for a long time for landlords and investors. Changes in tenant requirements and rights, taxation, the need to bring properties up to standard, these have all hit the sector quite hard. However, there's also never been a better time for landlords to diversify their portfolios, considering there is an increasing number of specialist buy-to-let products across the market. This includes things like holiday lets and HMOs, which I'm sure we'll be speaking about in detail today. A recent report found that 2/3 of landlords believe the pandemic will have little impact on their business, with those based in Wales and the Northwest the least likely to have been negatively hit, potentially highlighting where landlords may invest next. B&C has been busy reporting daily updates on buy-to-let criteria across the specialist finance market, and a lot of focus has been on the HMO and holiday let market, also the semi-commercial space. Is this a reflection on landlords taking a step up from standard buy-to-lets, or a result of investment journeys changing to a volatile market? The revitalisation of the high street has also been a big topic of conversation, especially since the government confirmed the permitted development changes last year. Consequently, I'm interested to find out from our panel today if we can expect a bigger play for semi-commercial going forward. We've also seen a rise in green buy-to-let mortgages to help landlords meet the EPC standards that are coming into force for 2025. But will this distort the buy-to-let market? Will we see a tiered buy-to-let property space going forward? And will this affect the appetite that lenders have in terms of lending on those old and new properties? So joining me to discuss what the biggest concerns and challenges are for landlords and property investors in the market are some experts in this space. And I'd like them all to spend a couple of minutes of their time to introduce themselves. So I'd like to start with Alison, please.
Thank you. Good afternoon. I'm Alison Horton Caulfield from Master Private Finance. I've been in the finance industry for 25 years next year, so we've got a silver celebration coming up, hopefully. I've seen lots of things change over the years, and I work in the specialist and complex buy-to-let arena. We're a brokerage, master broker, packager, and I'm really excited about today because, as Beth said, there's lots and lots of things that have changed recently since the pandemic, and we're seeing more inquiries in certain verticals than others. So yeah, I'm looking forward to hearing what you guys have got to say and answering any questions, and obviously learning what I can from these other wonderful people.
Thank you.
Indeed. So I'm Marcus Dussard. I'm Sales Director at Hampshire Trust Bank. I joined Hampshire Trust 20 months ago, like in the height of the pandemic. So I basically spent 2 days in the office, and then I was working from home ever since. So it's been a very difficult period. But Hampshire Trust, we've been lending the whole way through. So we've gone from strength to strength during this period. And it's a really tricky market for buy-to-let landlords, but we're there to find solutions and solve problems for them all the way through the process. So that's me, and that's Hampshire Trust Bank in a nutshell.
Thanks for that, Marcus. Michael?
Hi everybody, my name's Mike Coates. I'm Managing Director of Commercial Expert Limited. We're a master broker in Darlington, the northeast of England. I had quite an unorthodox journey in getting to finance. When back in the day I used to sell cheese for a living. I worked behind the scenes at the Civic Theatre, and I was a bouncer. All of a sudden I became a mortgage advisor with a company called Chestnut Finance Limited. The credit crunch came along, consumers didn't want to borrow any money, banks didn't want to lend any money, and then Commercial Expert was born. Businesses need to borrow funds. Second-tier lenders, the alternative market, unsecured borrowings came into place. And lo and behold, we're going really, really, really well. So Commercial Expert is a master broker. We've got a crack employed team who are there today while I'm down here. We look after direct clients, we look after brokers, whole of market, independent, FCA regulated advice. Thank you very much.
Thank you. And Shrina?
Good afternoon, I'm Sharina Patel. I'm the Senior BDM for Octane Capital. We're a specialist lender that does everything from bridging finance to buy-to-let products as well. We're very specialist and niche in terms of our array of products. I've been in the banking sector for the last 15, 16 years. I joined Octane during the pandemic, a bit like Marcus. It was literally a week before lockdown, but the team themselves have been brilliant, so I'm Octane Capital.
Hi there, I'm Adrian Maloney. I'm the Group Sales Director at OSB Group, which incorporates Interbay Commercial, Precise Mortgages and Kent Reliance for Intermediaries, which are probably three of the leading lenders in specialist buy-to-let.
Hi, I'm Mark Goldberg. I work for Together. I'm the CEO of the commercial function. I've been there for 32 years, and basically we came through the pandemic a lot smaller. We paused our lending. We re-entered the market in September 2020 and have just gone from strength to strength. We see buy-to-let as being a key market for us. We see the market expanding, lots of opportunities. And as you know, I think as we'll be discussing today, holiday let, semi-commercial and opportunities for people to increase their yields is going to be a key market in 2022.
Brilliant, thanks very much for that, Mark. And I probably should have started with it, but my name's Beth Fisher and I'm the editor of Bridging Commercial and Development Finance Today and the bi-monthly print Bridging and Commercial magazine, which you can pick up a copy on your way out just on the stand on your left. So let's kick off with the first question, which is all about how landlords are changing their approach to buy-to-let investments as we make our way out of the pandemic. Adrian, do you want to give an overview of what you're seeing in terms of landlords changing their investment strategies?
Yeah, I think landlords have been pretty robust through the pandemic. They benefited from the stamp duty holiday like everyone else. The purchases were high. I think the market's almost gone a little bit full circle. So, you know, if we sat here or we weren't locked down 12 months ago, whatever it was, you would have probably seen landlords looking at some properties that had bigger outdoor space because there was a demand for that, perhaps moving out to the suburbs a little bit more from city centres. But actually, as we get back to normality, which I think we're very much on the road to doing so, you're seeing landlords look at other opportunities, and we'll come on to some of them, I think, in the panel. But certainly, you know, you look at places like London, where perhaps during the pandemic, people weren't looking to rent because offices and workplaces were closed. You only have to go into the West End now to see how bustling that place is and the opportunity for landlords there. Student lets, that's coming back full pelt. Take it from someone whose daughter was looking at properties for university a couple of weeks ago. The returns on those properties are immense. And you touched on, you know, during your opening, Beth, semi-commercial. You know, through our Interbay brand, we see a massive demand for that. So landlords looking at the opportunities of having the right commercial investment, say, on the ground floor of the property, and then looking at the returns from renting the space above. You couple that with the competition that's in the market at the moment, the prices that landlords can get buy-to-let mortgages for, it's a really vibrant sector.
Michael, would you say your clients are kind of changing their investment strategies at the moment?
Yeah, basically what he said. The landlords have got their eyes open. They're looking for a much bigger return on investment. They're looking at a smart purchase. That doesn't necessarily mean it needs to be local to them. It may be a holiday let market, it may be student let market. You know, I've also got a daughter at university, exactly the same scenario. It's really robust, that space now. Lenders have come back in and there's a bit of a rate war going on. I still do believe that a chimney pot is a good investment, but I think a seasoned investor who is looking at growing their portfolio and maybe diversifying, they need to look further afield than they are.
Alison, would you say that your clients are changing their strategies?
Yeah, what we're seeing on a day-to-day basis from introducers is we're getting much more inquiries through about HMOs.
Okay.
Yeah, and a lot more about holiday lets. And we're also seeing people ringing us up, are you funding Airbnbs? So as you can see, the template's changing for what the landlords want. And they're realising, right, I can earn more money, I mean, yields are greater from this, they're greater in this type area of the country. But then you've got the other flip side of the coin where you're saying, what's their approach to buy-to-let investment? In Devon and Cornwall at the minute, what we're seeing is that a lot of the landlords are pulling out of the market. and they're turning the properties into Airbnbs, and landlords have got to be agile, I think, in this, where, right, I'm going to turn it into an Airbnb for now, okay, I'm kind of not giving as many opportunities to families, but I'm going to make a living out of the holiday let market for the time being.
Yeah.
How that'll affect things, I don't know. It could affect their economic recovery in terms of can they get skilled workers into that part of the country, because there's nowhere for them to live. There's no affordable rental properties because they're all turned into Airbnb. Who knows? But the landscape is certainly changing from our perspective.
Before I jump on to the next question, I just want to remind the audience we will be doing a Q&A right at the end in the last 5 to 10 minutes. And also we are live streaming this session. So you can access it on the FP Show app if you want to communicate with people who are at home as well and send your questions in that way. Just a reminder. How are plans for revitalisation of the high street, I know I mentioned at the beginning, impacting landlord strategies? Adrian, I know you've spoken a bit about semi-commercial there and seeing a rise in it. Mark, are you seeing a rise in semi-commercial?
We've been doing this for a long time. I think a lot of people are buying properties and trying to see if they can expand on that and get extensions, convert obviously properties to HMOs, which they see that they can get a better rent. A lot of people are sitting on a lot of money. They've not had much money to spend over the last 18 months. You're getting no interest in the bank. So we're seeing more new entrants into the buy-to-let market as well, which is exciting. But certainly semi-commercial, getting a shop which you can let out, and obviously or converting that into an office and then maybe putting 2 flats above. We're seeing a lot of light, medium, heavy refurb on a lot of properties that are being bought, where people can add a lot of value from a rent, but also a value from an actual poundage amount as well.
And you see, if people are short-term funding, for example, to purchase that acquisition, the amount of choice that they've got, Mark, at the moment to refinance onto different lenders. So that's why it's really vibrant in there as well. And of course, the LTV options are much better than they were 12, 15 months ago, Beth.
Adding value is the key to any buy-to-let investor today. Just buying a property and renting it out at set yield is probably not attractive enough moving forward.
Yeah, absolutely. Shrina, obviously Octane launched into buy-to-let last year. What have you seen? Has the revitalisation of the high street been kind of a reason for them to go to you for buy-to-let?
Yeah, so we do a lot of the semi-commercial aspect, and we're seeing a rise in that semi-commercial market. Also with the introduction of Class C and the PD schemes, that's kind of bringing in a lot more investors that want to get the commercial, semi-commercial kind of asset class, and as Mark said, to add that added value, get that diversification on your income. So what a lot of people have realised, investors, that during the lockdown, if the uppers are vacant or the below is vacant, they've still got an income stream coming through, regardless of one being vacant. So it's causing that diversification. So we're seeing a lot more of that.
Marcus, are you seeing more semi-commercial plans coming your way?
Yeah, pretty much echo what everyone said so far. I mean, at Hampshire Trust Bank, semi-commercial is probably the biggest part of our business that we actually do. As I say, I joined 20 months ago, and that was the thing that surprised me the most, was actually the type of semi-commercials that we actually do at HDB. It's pretty much right across the board in terms of semi-commercial, but the key bit is how an underwriter actually looks at it post-pandemic. Some people are taking into account that semi-commercial income, some aren't, but it's all about that covenant and having that underwriter that really looks at the case, gets under the bonnet of it and decides this is something we want to do, and then takes it forward. So yeah, semi-commercial will always have a space, and then we do an awful lot of it at HDB.
Adrian, obviously Interbay came out with a semi-commercial and commercial range, coming out of the pandemic. What challenges are you seeing landlords face the most right now, especially in those markets?
Well, I think that the challenges are easing, Beth, because as I said, there's more choice there. It tends to be in that space people looking at that are more experienced, seasoned investors. Marcus raised a valid point, and I think we're coming away from that, where lenders only looked at, if you like, the residential aspect of the rental as opposed to the commercial. But I think he touched on two very good points: underwriter expertise. Also, I think it's lenders who have market knowledge that can support that, and that comes down to your integration with the valuation process. I think for the right asset, you can now assess how the commercial element is performing on the high street. So you know, at one stage there during the pandemic, you probably looked at things like takeaways, offices, you know, sort of dental medical practices and things like that. But actually, now that things are opening up, from a lender's point of view, you can be more robust in your decisioning in that. And as I said earlier, I think, you know, probably during the pandemic, you saw people move out to the suburbs, and you look at more tertiary investments, which have performed really well during the pandemic. But as we come out of it, city centre life is starting to open up, it's fair to say, at the moment. I think there's big opportunities there.
100%. Alison, what concerns are your landlord clients having at the moment?
I think there's numerous concerns from the landlord clients. They're bothered about getting paid still. They're also bothered about what's going to happen in terms of, as I said before, the landscape's changing. Am I going to stay with a box standard buy-to-let? Am I going to turn it into a HMO? Is somebody going to back me to do these things? But I think they've also got a concern as well in terms of what I'm reading is that there's going to be some big players coming to the market. You've got the likes of John Lewis, who are thinking, right, we're going to get into the property market. We want to create 10,000 homes. 7,000 of them are going to come from the investments that we've already got. We're going to create high tier, high spec, high quality premises, and we're going to try and attract many more people. But the positive from all that is, right, the landlords will have to up the game as well. And I think also the EPC things, that's really, really bothering them, because they're worrying, right, what's the cost implication? Am I going to get return on my investment? Is this something that I should do? So I think there's a myriad of things that are going on, and I think people will ride the storm out, because every month there seems to be something new happening, and what am I going to do about this, and what am I going to do about that? And the government's not been very clear on the EPC and things like that.
Yeah.
So they are mainly the concerns that we get when we speak to the landlords who are looking for funding.
Absolutely. That leads on to my next question on what the panel thinks will impact landlords being able to meet EPC standards going forward. Mark, do you want to kick off that?
I mean, it's really interesting because we've just kicked off a project. We've now got a working committee to look at it. I don't think we understand enough about it, but it's going to happen. The government are really clean on this. You know, EPC ratings is a big thing. No one really understands the costs involved in this, what it could do. They're talking about you might not be able to rent a property out unless it's a C rating. Some properties have never been touched before, and this is all about landlords realising that it's not just buying a property, sticking a tenant in it, you get the rent and that's it. You know, there are works that need to be done to the property, maintaining it, updating it, and I think a lot of tenants now have a lot of choice. So, you know, a lot of the new builds are already at the EPC rating where it needs to be. So I think the landscape is changing, and I think a lot of the landlords do need to get on the front foot of this, and so do a lot of lenders. So you know, we are nervous about this. We've got 40,000 live customers with residential properties. What are we going to do for them? And then what are we going to do for our new customers coming to us? We see second charges as being a big opportunity in this across the industry, because people are going to need to get new boilers, they're going to have to look at the windows, they're going to have to look at the ratings. I think landlords should have, and brokers, certainly, and lenders, should be really working closely together on this, coming up with a plan. You know, we're designing a website at the moment with questions and answers for customers, existing customers, to find out how it can affect them, what the costs are, working with other associations, there's government grants available. So I think, you know, it's going to come very quickly. We're already nearly in 2022, so we've only got 3 years at this. And anybody who thinks, oh, it won't happen, it is definitely going to happen, and they'll be caught napping.
Look, there's financial implications for the government if this doesn't happen. Right? This is going to happen. And, you know, our own research tells us the vast majority of landlords are aware this is coming, and they're supportive of it, because, of course, their bills go down if their property is more, I guess, environmentally friendly in terms of or energy efficient. Tenants, and you look at the generation of, or generation rent at the moment, they want to live in an energy efficient property. And, you know, publicity around things about this whole environmental issues at the moment is top of the agenda. So this will happen in 2025. I think it just means that the market becomes more professional again. On the back of regulation, it will be about the larger landlords who are able to upgrade their properties if they need to, as Mark said there. I think what we haven't seen yet is any innovation in this space in terms of products. So products in terms of green offerings at the moment focus on those properties that are already there.
Yeah.
The big challenge for this market is getting those properties that are not at sea at the moment, and they reckon in terms of the buy-to-let market around 70%. So it is a massive market, a massive opportunity for brokers, but we're only at the start of the journey as an industry.
Absolutely.
You'll be
And
able
the
to
lenders
charge more
who
rent for a property that's at a C rating, so landlords will get to understand that quite quickly.
definitely, and lenders who are on the front foot and innovate and do bring out green buy-to-let mortgages that aren't just for the new builds, which are quite easy to do so, and we're upgrading the historic property in the UK. That's the way forward.
And look, Beth, this isn't just about buy-to-let, it's about all properties.
Yeah.
Properties that could be unencumbered, for example. All properties will have to hit that C rating at some stage.
Even commercial as well.
Correct.
So this is not
Yeah.
just buy-to-let, it's your own house that you live in.
Yeah.
And then you've got commercial properties as well.
Well, I seen something on the news last night. I don't know if people have seen it. There's a new house called the Z House. Has anybody seen it? And it's all energy efficient. They brought commercial heating systems from commercial buildings into residential homes. And what they're saying is that, yeah, this is absolutely fantastic. Your skirting boards add your water pipes at each home and everything. But the issue we've now got is there's no skills in the country. Yeah. They've not got the people who can fit these houses out. So maybe the lenders or a committee or something, government can look at, right, we're going to put skills classes on, we're going to get people trained in how you do this, because this is what we're caveating, this is what we're pushing, it's going to happen, so they need to be able to deliver and get the people who can fit the houses out.
Education and innovation is what's needed.
From just the sorry, Marcus, go ahead.
So morally, I think as an industry, we have to do this. So everyone's saying it will happen. Morally, we have to do it from an individual perspective, from a lender perspective. We haven't yet launched anything green, but we're having all of those conversations now about how we incentivize people to do it, and then we do have to look at our back book as well and make sure that all of those people meet it. So just on the moral side of things, we've got to get there, and we have to really push these conversations as individuals, but then as the companies we work for as well.
I think just as a collective for the lenders on the panel, are you all looking at how you can innovate a product for historic property to bring it up?
Most definitely.
Yeah.
Definitely. I would say at the moment with Octane, we actually have a product that allows you to do works whilst you're on a term. So you can actually do your upgrades, you can actually do the works without having to move on to a different product. But if you do need the funding, we can also switch it on to a refurb product, which will fund you your boiler costs, your new windows, your insulation. So we're already trying to be innovative before 2025 and getting the brokers, the borrowers engaged to ensure that they're all kind of ready and planned.
I think
I think we need to be mindful about the actual investor here as well, though. And I totally agree with everything that's been said.
Costs.
I'm a landlord. I've got several properties, and your mortgage interest rate relief has disappeared. So there's a lot more tax people are paying. Certainly, if they're a sole trader or a partner, to migrate that across to a limited company, yes, that's a good thing. But there are huge implications and costs to do so, and time. We've been through a pandemic where potentially landlords have taken a major hit on rental income. We've got inflation kicking in potentially really high, which the first thing that goes is a landlord's payment from a lot of lenders, a lot of landlords throughout the country. We've got this to come. Is it one size that fits all? We've got properties with 2 foot thick stone walls that are EPC rated as low as they can get. Spend £20,000 and it'll lift them one category. That landlord's got to borrow £20,000. That's just a pure on-cost. They've got to pay that back. It's an on-cost to their overhead. And I think we've just got to be very, very careful there that we don't just continue to bash the landlord.
You're absolutely right, and investors will be thinking about that a lot, especially as we're coming out of the pandemic and they've all taken a hit. The cost it takes to bring up a historic property to EPC standards, when they're weighing up how much they're going to get yield-wise or capital appreciation, it might not stack up, and therefore will we see loads of stranded assets? And in advance of that, are lenders reducing their appetite for certain properties in certain locations?
I think the big problem for, new investors or new people that are buying these properties will have that in their mind. What do you do with all the customers we've got on our books. We have got to, my main aim at the moment is to service the 40,000 customers that are going to need work to the property, going back to what you were saying, and it's that education piece. There is government support for this, so we're trying to work with an external company now who knows how to get government grants for this. We're talking about maybe matching the government grants at a cheap rate, extending it, all these different things. But it's certainly the people that are in it now have really got the problems. The new ones, they'll know what they've got to do, they'll assess what the cost is, and they'll factor that in. So I think there's a lot of growing up to do, and as you said, we've got to support the existing investors that we have to take them on this journey.
I think that this isn't a race against each other. This is something we've all got to do together as a sector to get it over the line. Because to Mark's point, it's not just about supporting the new investors who can easily see if a property is C or above. It's how do you encourage and actually almost insist that you get those properties that are C and below up to the relevant standard.
Yeah.
What's funny is I thought I understood this until basically I started investigating it more and I've had presentations done to me. And I thought, I didn't even know that. Oh my God, this is what you've got to do. So there is, where we're saying that a lot of people know about EPC ratings and everything else, do they truly understand the cost, the work that's going to go into it and what the government plans are? Because soon they might not be able to rent their property out because it doesn't fit the rating.
So you're the man to come to for an air source heater, right?
Maybe. I'm certainly looking into that.
So we've had quite a few questions here. I mean, I could talk about this for ages. We did a whole issue on sustainability, which you can pick up on our stand. But this year, we've obviously seen a rise in specialist buy-to-let products. But for the brokers on this panel, do you think that they cover enough ground? Are there any gaps in the market for landlords right now in terms of finance offerings?
I think it's fairly well spread personally. I think if you jump into the semi-commercial, certainly look at the range of buy-to-lets. There's a ton of lenders coming to the holiday let space. There's some great rates out there at the moment, some really great rates. Loan to values have been pushing really well recently as well. But push into the semi-commercial and push into the commercial, that's a different world. That needs to come back with some force, I think. I know these guys together particularly are pushing very hard on that. And there's a few, the standard Hampshire trusts and your usual second-tier lenders. But it's a good space for an investor to get into. Certainly on the semi-commercial, more needs to be done though.
Okay. Do you think that in the number of lenders or actually the types of assets that they're on?
More lenders.
More lenders.
We need more lenders in that space, 100%.
It's really about the product. It's about the criteria.
Yeah.
It's what can you do to help? The conversations you have. So we push the broker interaction with us. Come and tell us what you want and what you need, and therefore we can then try and make solutions off the back of that. But it's the criteria tweaks that you need to have, because as you say, it's not one size fits all. So therefore have the conversation with us, tell us everything up front, and then we can try and get to a solution that actually helps. And this is why we do so much semi-commercial, because we've got that open and pragmatic way of looking at each deal as it comes. But
but I think you'll see that coming now. Look, we've come through a pandemic. You had businesses that were closed down that were on support during that period. We're exiting that period now. So I think to your point where you need more choice in semi-commercial and commercial, you'll see it. And I think you'll see the criteria come. But it's not all about going up the risk curve and dropping rates. It's about making a decision when it's right.
Yeah, it's widening what you're targeting. Because I know when Interbay launched back in, relaunched its semi-commercial and commercial offerings, there was set asset classes that you would look at, takeaways, that sort of thing, which did really well during the pandemic. But I assume going forward, it will be, even widening it across the board.
Couldn't possibly say in front of Mark and Marcus, right?
I'm sure. How has the HMO market changed as a result of the pandemic? I can't remember who mentioned it at the beginning, but people were saying they were getting more demand.
I think it's changed because, the landlords suddenly realising that I can get more money out of a HMO, all right? So why would I not change it? And I also think that buying smaller properties, changing them into HMOs as opposed to buying great big properties. But I definitely think the HMO market is on the up and up. constantly.
Yeah, it's interesting because the HMO market, I think, was the one that struggled the most in the pandemic because a lot of people didn't want to live in that close proximity to each other. So, but it is certainly coming back, but it's the quality of the HMO I think that people need to focus on, because tenants want to have, you know, a nice bathroom, they want to have a nice bedroom, communal space, outdoor space. So I think it's the quality. You know, HMOs have got a reputation for being a bit squalid sometimes and full of a different mix. You know, we've got one customer that has professionals in there and they're all become best friends. They're supporting each other on their businesses. It's amazing when you go in there, and I think people are now focusing on HMOs on quality rather than quantity.
Well, you look at the quality of student accommodation today compared to what it was 20 years ago. You know, that just gives you the example. And we have investors that have set models, set designs that go in, and they know they can get better returns from that. And you know, it's not all about shared bathrooms anymore. The amounts of these units that have en suites in them for each individual, to Mark's point, really well designed communal space. You know, super fast Wi-Fi, broadband, all the things that, you know, you might get in a 4-star hotel without the drinks. But it is, you know, the HMO market is good, and you know, I think the people that invest in that have upped their game in terms of the quality of the accommodation they provide.
Right,
as somebody who's got 4 kids who now don't want to live with their who don't want to live with their parents anymore when they've last spent the 18 months on top of each other, I think a lot of young people now see this as an opportunity to get 4 or 5 friends, rent a house out, you know, have better accommodation, Wi-Fi, you know, communal areas. And that's what they see as the way forward.
Yeah, great. I totally agree. Because when you're looking at the market, it's everyone, when you sort of growing up, you want to live by yourself. Where is it?
That's right. Just bring up. Thank you.
So
you kind of want to live by yourself, but actually, post-pandemic, when you think about it, there were a lot of people that were alone during that period. So actually now, you actually want to live with other people. So you don't want to go through this period again where you're just by yourself. So the HMO market has moved. And like I say, the quality of it has just gone up tenfold.
My son did that, what Mark spoke about, where him and his friends, they went and got a HMO in Manchester. It was top notch. It was a really, really lovely place. It was kitted out really good. There was big communal areas. There was an outside space. And it was just like a big party most weekend. They looked after it because of the high spec that was in it, because from a mother, that was my worry. But they just loved it. And then those people who lived in that HMO, they marketed that HMO to other people, which was unbelievable, because they said, you need to do this. You need to look into this with all your friends. It's really, really lovely, and they was getting people around. And he had the time of his life, and he was in a really, really lovely, safe, secure home.
Yeah. Obviously, HMOs that are better quality are going to have less voids in tenants. So are lenders offering preferential rates to landlords who have better quality HMOs? Is that a product offering?
I think it's what you expect, though, isn't it, today, in today's market, with serious investors who want to have better tenants. It's a better quality product, better quality rent, and then you don't have voids. I mean, I don't think it's a rate thing from a lender. I think we're certainly focusing on the quality of the landlord themselves, about what they give in, how do they treat the tenants. Nobody wants bad publicity. You know, I've seen the papers years ago with rogue landlords where, you know, there's basically soot everywhere, water coming in. People don't want that anymore, and they're not going to pay for that.
Yeah, absolutely.
And reputation is such a big key in the HMO market. So if you have a good reputation and you replicate that kind of model across your whole portfolio, lenders are going to see that and see that this is an investor that knows what they're doing. They execute it well. So on a lender perspective, we want to lend to those kind of borrower profiles. So high-end works.
Tenants have got more choice now. The buy-to-let market is only going from strength to strength. So, you know, your product's got to be right.
Yeah, absolutely. We mentioned a bit earlier about the holiday let market and people moving out of the city and getting, you know, second properties and investment properties in rural areas. While it's booming right now, do you think that the holiday let market is a bubble waiting to burst?
I think, well, from the stats I've seen and the surveys I've seen, it's 22% up in 2022 already. I think a lot of people still want to go abroad, but I think a lot of people are still scared. You know, my parents will not go on a plane under any circumstances. So they want a holiday in the UK, and I think the people who have gone to places in the UK have seen how beautiful it is. Quality hotels, quality food, really enjoyed it. Shit weather, unfortunately. There's nothing we can do about that, even in London. They think I've brought this today from Manchester, by the way, the rain. And, this is typical for me. But I think people have actually seen how beautiful the UK is. Great places to go away, great places to go with kids. So I think the market's only going to go from strength to strength.
I think it's hard to judge what the size of it is, because you've got a lot of people who've got a second home that rent it out as a holiday let, and that can be done on a sort of residential basis. Then you've probably got more the sector we're interested in, which is almost someone who runs it like a business. And certainly, you know, Mark's right, over the course of the last 12 months, we've seen growth in that sector. I think rather than a bubble that's going to burst, I think you'll see a sector that will plateau.
Okay.
Because I think you'll start to see the mix of, to Mark's point, of people who are happy to go abroad, that's people like me, and to Mark's point, perhaps a generation that's older, that's like my parents or Mark's parents, that their aspirations are not to do that as much. And actually what they realise is they can get good quality accommodation in good quality places in the UK.
I think what needs to happen with holiday lets though, because when you're looking at, so we went away to a few places in the UK and the prices are unbelievably high.
Yeah.
So as it gets to a point where I decide, right, okay, I will take my family away. If it's the same cost as me going abroad to me going down to Cornwall, I'm going to go abroad. So I think there needs to be some sort of regulation towards some of the prices that are on offer.
Marcus, I think this year is a year in isolation because of supply and demand.
Yeah,
so I think you will see, and that's to my point, a more realistic rents on those as the rest of as travel opens up. Look, you only have to look on Monday, the States opens up. Look how busy it looked going into JFK. Yeah. People are going to go abroad, but you know, I think you've got people there who know what they're doing. You assess it in a slightly different way. It is a specialised sector. I think you will see a more, I guess, evening out of what the cost was. You should have held fire and gone next year, mate, right?
But investors buying second homes and then renting those out at a reasonable level, I think is a big market. It's sustainable, there's a market there for it. Families are going away together, buying or renting larger houses.
Yeah.
You know, in the peak times, you can get great rents. Then in low season, you have to reduce the rent. So there's lots and lots of opportunities.
I think it really is the worry. The word reasonable is key there, because I think there is a worry that those that have bought during this time and have been renting them out at decent rates this year and last year, next year, are they prepared for a possible drop in rates? Can they afford the mortgages they're on? Is that something which you're thinking about in the background?
I think what lenders have to be a little bit more cautious with when they're looking at holiday lets is just to make sure that if there isn't that income and it has to be on a regular AST, will it still work? Because what you don't want to do is highly leverage yourself on a holiday let, which if that income doesn't come in, you're then in trouble, basically. So lenders just have to be a little bit more cautious, I suppose, when they're doing their excessive assessments, and just ensure that it works on both aspects.
And I think it's sensible lenders. You know, we took a slightly more cautious approach in terms of the rental coverage was higher than you would normally do on a buy-to-let. The way we assessed it over an average period, so that you had the ability to look over, say, a 30-day period at peak and non-peak times over the 30 weeks was a sensible approach to that. And from our offering, we wanted experienced landlords doing that. We didn't want to see people going into it blind for the very reasons that you say there, Beth, in that nobody knew what the longevity of that sector was.
Absolutely. We are almost up to our last 5 minutes where I want to open up the floor to questions. So I just want some final comments from you guys in terms of what area of buy-to-let you think needs most education.
Well, we see a massive opportunity with a lot of what we've discussed today with EPC and everything else with second charges. A lot of people have built up a lot of equity, house prices have increased. So improvements to the property that they've got to make it up to EPC standard C, the ratings, and improving, let's say, the property to get a higher rent. We see that as a big opportunity over the next 12, 18 months. And that's certainly something that we'll be pushing.
Okay.
Look, I think you go into 22, it's a remortgage market. You've got a big roll-off from 5 years ago from when the regulatory changes came in terms of additional underwriting. That's a big opportunity for brokers and for landlords because rates are cheaper at present. Put a big caveat there at present to where they were 5 years ago. And to Mark's point of view, landlords need to get on the green bus now because that's coming down the track pretty quickly.
Absolutely.
I think valuation methodology is quite a key education area where a lot of, I would say, brokers, investors kind of understanding if you've got an HMO, if it's a 4-bed, a 8-bed, a 10-bed, how will that stack up in a valuation? How do lenders look at that? And, you know, is your GDVs, let's say, if you're doing a project, do they stack up as well? And I think there's not enough education on the aspect of where do you think your values are coming in? How do you think your asset's going to be valued? So I think there's still room to kind of improve on that aspect.
Absolutely. I mean, I think the latest VAS data is that there's generally a 10% from terms of expectation of values and the actual valuation. It's normally a 10% difference, so that's definitely key. And I assume the way to do that is for brokers to be using like the sources that are out there as well, and the third parties that they can communicate with. Michael, as a landlord yourself that you mentioned, anything else you think that you've seen that there should be some more education on?
Just some advice for kind of investors, really. Look back at the high street. Look back at the high street and see what your local authority is doing. I mean, just a tiny example, Darlington, where I'm from, the Treasury are moving to Darlington, 750 people from London. Now that is enormous for the town. The town I used to be very embarrassed about saying I was from Darlington, and now it's on the up. You know, we're building a new train station. Let's go Darlow. But if from an investor's perspective, semi-commercial, there's so many units that are empty in the high street. You stick a small shop downstairs, a couple of flats upstairs. You're really protecting your investment. You're really protecting your income. I think that's a really good area to grow. Lenders can get involved. The broker can get involved. Just look back at the high street.
Yeah, I mean, I'll just take it slightly differently because obviously most of the points about where it's going is just how to package deals up. Package them up in a way that helps both ourselves and the broker to actually get the best deal for the clients. And I think if, as an industry, we all come together and put in deals together in a similar sort of way, then we can get to the right results for our clients right across the board.
Absolutely. More standardisation in the market and bringing that information up front rather than piecemeal. I think that's the other main thing. Any final thoughts, Alison?
I'm with Mark. I genuinely think it's the EPC. I think it could be a catastrophe waiting to happen if they don't get on board.
We will have a Q&A now. We do have people live. We do have a question live from people who are at home. What would you expect the UK private rented sector market to be at by terms of gross lending in 2022 and 2023? A crystal ball question. Anyone like to take that one on?
I suppose what we've seen is a lot of pension schemes with a lot of money getting involved in a lot of high-end PRS schemes. Certainly in Manchester, I went to one the other day. It was like a 5-star hotel. It was amazing, you know, with a football pitch, a bar, open space, library, cinema. You know, so I see it's very difficult to predict, but there's a lot of people, a lot of the larger organisations, pension schemes, who've got a lot of money. I think you mentioned it before. Yeah. You know, John Lewis are now going into PRS. I mean, you know, stick to selling sleeping bags and everything else. All of a sudden they become the landlord. I think it's Lloyds are going into PRS. I think it's impossible to say the size of it, but there's so many people going into it and the standard is so high.
22 will be strong. You got so much rate roll-off, so much better deals for clients than when they took a 5-year fixed out 5 years ago. So it's going to be a strong year. It's going to be strong in terms of remortgages, purchase. It'll all depend on the amount of stock that's on the market because that's the challenge as we come out of the stamp duty holiday. 23, I can't see that far ahead, unfortunately, Ben, but 22 will be good.
Okay, great.